Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. All right, folks, welcome back. Happy 4th. Rob, what's happening? How you doing?
No, I'm just trying to relax a little bit before the 4th, and this market is not allowing it.
It's not allowing it.
No.
It's not allowing
just keeps going, keeps getting worse. Although we've got a little bit of a reprieve today, it seems like.
I don't know. I think we bottomed. I think it's up only from here. I actually don't think
you
that,
think it's up on
okay. I actually don't think that, but Santiago is not with us today, so I feel the need to make this a very bullish episode.
Can I tell you, I was talking to a very well-known founder in the space. I had drinks with him over the weekend, and he was saying, "Hey, I listen to the podcast sometimes," and I was like, "Oh, that's great." And he was saying, just a little bit of piece of feedback for people who run a crypto podcast. Santi is so negative all the time. It sort of makes me not want to listen to it. And so, maybe he was like, you guys could be a little bit more positive sometimes, since you run a podcast about this space that you're all working at and that you're invested in that has made you money. So
Rob's like, people all, told me that you guys should probably just not show your faces on the episode, and I should be basically monologue. And I don't disagree with him. I've given, so I think Santi will listen to this, and my feedback for him would be to be more bullish because we're in crypto. But I will say, Santi is one of the best people I've ever met at not having emotional beliefs tied to priors. And I remember at the very bottom of the market after FTX, Santi went very long Solana, and this was after he was like a big ETH investor and ETH person. And I remember how much crap he got for that, and he ended up being very right. And then I remember at the top of the market, he said, "I'm selling a lot of my soul," and he ended up being right about that too. And I do actually, I think he is too bearish on many things, and this is a crypto podcast, but I do respect the ability to not be emotional with his longs.
Yeah, I mean, listen, even the memory trade, he was like, a week early too, until everything like blew up, right? He's obviously a very, very good trader. So let's figure out how to get him to be very positive and very good at trading this market going up.
That's the goal.
So
that's the
how
goal.
about that?
All right. Let's okay, here, so let's make this a fun episode. There's this week is like the tech companies are actually doing really cool things in crypto week. We had Robinhood, we had Stripe and the consortium building OUSD, I think it's called, which we'll talk about in detail.
Standard.
The open standard. So open standard, which is many companies, Stripe, DoorDash, a bunch of folks, obviously, which we can talk about when we get there. We had Robinhood Chain, which is very interesting stuff around that, I'd say. And then actually Cloudflare is the announcement I think many people probably would have missed because it went a little bit more under the radar, but I thought it was a very interesting announcement too. Maybe if we get to it, there's a whole conversation around Venice and token versus equity. Maybe we could start though with MicroStrategy. You were at the, I think, Goldman conference. Whose conference was it? You were at a conference. Saylor
Goldman
presented.
conference. They do it every year. Did it this year. Biggest one ever. 1,300 people. It was great.
Saylor presented. So I have two questions for you. One is, what is the reaction at a conference like that to Saylor and his, Bitcoin is the hardest asset in the world, the perfect collateral? What is his what is the reaction to Saylor in that room? And then two, what is the reaction to just crypto digital assets in that room in general right now?
So the Goldman conference has been going on. I think this was the 5th year. It might have been the 4th year, the 4th or 5th year. I've gone to every one, and it's gotten bigger every year. So the first one was like maybe a couple hundred people, a lot of traders, and then some of Goldman's like high net worth clients. And you could tell it was sort of like, it sort of felt like, kind of this kind of weird, like maybe some of like the early Bitcoin and early crypto conferences where it was sort of like the odd people who were like sort of interested in this thing. Even though at that time we thought we were mainstream, and it was still a couple hundred people. Today or this week, it was 1,300 people. They were double capacity. I actually ran into somebody outside Goldman's office who was like, "Hey, listen, I thought they had registered me and now I can't." And I'm like, "Can you get me in?" And there was like, people like texting like, "Oh, I want to get in." There was like a lot of FOMO around it this year. The excitement for people who for like the institutional adoption side of crypto, a lot of the infrastructure, the tokenization, the stable coins, like that excitement is sort of at all-time highs right now among a lot of these people. And then there's a lot of these, kind of Goldman clients, both on the corporate side, the enterprise side, and the high net worth side, who are still very bullish the space. And so I have never seen a an institutional a Goldman conference or not a non, call it like Blockworks or, kind of a conference put on by someone who's more crypto native, an institutional conference be as bullish as this as it was. And there would be as much FOMO around a conference as there was for this. And so that was awesome. And it was awesome to see. I think Saylor specifically is a tougher conversation because I think a lot of people, especially post what's happened in the last, month or two, have, I think, a very negative view of some of the things that he said and done. And so that was actually quite interesting to see because he kind of kicked off the day and might have been the most, I think, the worst received conversation that happened that day.
Saylor was the worst received. So people were actively negative, or it's just kind of like, yeah, maybe a lot of skepticism.
I think there's a lot of skepticism about Saylor specifically because of all the financial engineering that has happened at MicroStrategy. A year ago had people really excited, right? And do you remember, we had so many months of this podcast that we were talking about DATs, almost that entire time. And there was, a lot of very smart people going out and saying, "Hey, listen, like this is why this works. This will work forever." You had people on your podcast, or on Empire or otherwise, who were actively saying, "Hey, listen, like this is gonna or could should and could exist for a long period of time." And now, maybe near the bottom or somewhere on the downswing of the market, we've seen the bad parts of what Saylor has done, and specifically around stretch. And then I think he talked on Tuesday morning at the conference. Monday, they came out with sort of their guidelines about how to respond to stretch specifically and stretch trading as badly as it did. And I think there was a belief broadly that he was unwilling to make the hard choices and was kicking the hard decisions further out into the future. And that it was going to continue to create this overhang to the market that we're going to have a hard time getting past until he makes the hard decisions that he created for himself by launching this product.
Yeah. Yeah, I don't know, any other thoughts on I like, yeah, any other thoughts on Saylor? Obviously, the Bitcoin market hangs on a lot of, I think really his decisions here and like what he ends up prioritizing, but I don't know, any takeaways from it?
Yeah, I think my only takeaway is that, stretch was a bad idea, right? And I think there's, it was very, like he got greedy and stretch is, I think, a greedy product. And it is, they launched this, sort of, or they came out with this sort of framework on Monday that says, okay, well, now we have to keep at least, 12 months of cash at the company to pay for these dividends. We also are going to over collateralize it with a separate bucket of Bitcoin. We've got, I think it's around 20 months of dividends right now. We can continue to, we've told you that we can sell up to X amount of Bitcoin in the future without coming back to the market and come back to board approval. And so we've put we put it in a box a little bit in a way that we'll make decisions around stretch. And he clearly did that because he wants to preserve the ability to continue to raise more capital and to hopefully go and buy more Bitcoin, I guess, right? But it's clear that there is going in times of market stress, and there will be more times of market stress, that this product is going to continue to be an overhang. And I think in my mind, the decision that will have to be made at some point in the future is to essentially get rid of stretch or to just let it trade at a significant discount and not raise net new capital in that way other than in the common. And so I think there's there are some people who are quite upset about the current situation that we were in, and believe that the current ways of which they've decided to respond to the market volatility is not the best path forward for either MicroStrategy or Bitcoin.
Yeah. I tend to agree with a lot of that. Where I think I will not agree with you on some things is open standard, OpenUSD. So that's the meat of this conversation. I want to get there. So I'll pull up my screen for anyone who's watching, but I'll talk through it too. So the website joinopenstandard.com. I'm going to read some of the highlights from this blog post. Introducing OpenUSD, a new stablecoin for global money movement. Stablecoins are being adopted rapidly, yada yada. OpenUSD introduces 3 key design principles built for scale, earned by default. The key here is that partners receive all the earnings from OpenUSD's reserves, less a small management fee to cover their operational costs. On the built for scale, it means they can mint and redeem OpenUSD at no cost and with no artificial limits on volumes, and govern collaboratively. So you can even just in right in the outset of the blog post, you can see who they're going after here. You can see who they're kind of there's a target on the back of one company, right? And to no surprise, Circle stock opened down, I think about 6% right after this blog post. And
When it was
yeah,
down 17.5% on the day.
yeah, exactly. So yeah, I mean, a lot of huge companies signed up for OpenUSD right out of the gate, right? Visa, Stripe, MasterCard, Amex, Discover, Fiserv, Audion, Cloudflare, Klarna, DoorDash, BlackRock, US Bank, Commonwealth, Bank of Australia, MoneyGram, the list goes on, right? It's a huge list. Google, Samsung, IBM, Shopify, crypto companies, right? Anchorage, Ripple, Base, Solana, Tempo, Coinbase. I think this is, it's an open standard, hundreds of companies. It is really Stripe's initiative, is what I would call it. It is it's being run by Zach Abrams, who founded Bridge. Bridge was acquired by Stripe. I think that's even interesting because Bridge was like, anyone should get a stablecoin. This is like, there should only be one stablecoin, so we should talk about that. So yeah, I mean, Rob, you had, I think, one of the more thoughtful, better takes on this on Twitter. So yeah, I'd just love to hear your take on this. There's a lot of angles, right? Is it bearish for Circle? Is it a capitulation of the thesis that everyone should have a stablecoin? But let's start macro, and then we can go into the specifics.
Yeah, because I think there's a couple different things to talk about depending on how you want to direct this conversation. But there's the competitive dynamic. So what does it mean for Circle, Tether, Paxos, Agora, like all these guys? There's the how likely is this to be successful, and what do you think about the way they've constructed it? And then there's, okay, well, what does it mean for stablecoin adoption more broadly? And I think those three sort of topics are really important here. Maybe I'll start on open standard itself, and just what I think are the good and the bad of this. And the good is obviously clearly one, Stripe is an incredible product company, engineering company. They they're leading forward a lot of the really, I would actually say they have probably been the most important company in like enterprise stablecoin adoption over the last, call it year and a half, 2 years. And they're taking a leading role and trying to distribute stablecoins and tokenized assets, et cetera. And so that's great. Obviously acquiring Bridge and acquiring Privy have been a big part of that. They're some of the things of which they've done in terms of the structure, and there's a lot we don't know, by the way. So there was this blog post. It's still pretty vague on some of the, I think, really important things, but some of the things they said, like, oh, we'll free mint and redeem. Well, free mint and redeem is clearly obviously good for payments use cases. Redemption fees have been a problem that people have complained about, especially at payments companies, for a period of time, and getting rid of that allows for the free flow of money that and better clearing essentially than has existed before. And so that's great. Mint fees are often non-existent anyway, so mint doesn't matter as much as redemption does. But the redemption fees sit there on purpose because, of course, Tether and Circle and others are incentivized not to have you redeem because they make money on the amount of stablecoins outstanding. Things like yield sharing obviously matters to people. Now, this is already something that like USDG has been doing, which is also a similar type of collective model over at Paxos. Something Agora has been doing from AUSD. Circle itself, outside of their contract with Coinbase, has been striking a lot of yield sharing, these sort of distribution deals with a number of different partners. And so I think it's important, but I don't actually think it's that important because the market was already moving this direction anyways, and everyone was already kind of focused on sharing yield anyways. And so it's not really something that I see as net new. And so then you get to the, okay, well, we have all of these partners around the table, and this is about, adoption of something that we can all use for the collective good for a better new rail. And that's great. And having all this people around the table are great. It's hard. And I think I would never, it's hard to bet against Stripe, but there is nothing you can point me to that's like, a consortium of this size that has ever been successful. There's a number of consortiums that have tried in the stablecoin space before that have not worked before. Even Circle itself started as a consortium, and then they basically cut a bunch of people out of that consortium. There are some consortiums in the payment space that have come out of banks that have been successful, but it's a much smaller set of people and all are clearly aligned on building better rails. Here, I think there's a lot of actually misaligned incentives among a lot of these customers or a lot of these consortium members. Now, that doesn't necessarily matter if you get a few of the really powerful and big ones to go and push this and distribute it. So it doesn't necessarily matter that Adyen and Stripe might be misaligned because Adyen doesn't have to, do anything around this. I also expect that everyone wanted to have their logo and their name on this thing because they knew it would get a lot of play and a lot of coverage, and that makes sense. That's the right incentive. How many of those people are going to do anything to actually further the distribution of this versus strike a deal with USDC or to, do something else? I think that's very much up in the air, and I expect actually the vast majority of these customers won't actually do anything to help further adoption, but maybe a few of the really big ones will, and that'll be what matters. And so, and I think Jeremy came out with a very long post too around things like, how hard it is to get their compliance infrastructure, how hard it is to build these integrations into a bunch of different places, how hard it is to get liquidity up, and all of those things are true. But these are, a lot of the names around the table here are people that can solve those problems if they want to solve those problems. And so I think it's going to be hard. I think they'll probably end up having some level of success. I don't think it's a death knell to Circle the way other people think it is. And I don't think it's a foregone conclusion that they'll run away with some market.
Yeah, I thought we were going to disagree more on this, but I tend to agree with a lot of that. I think the most important thing here is I have never seen a consortium of hundreds of people, including hundreds of rivals, 7 different banks and Adyen and Stripe, and multiple crypto exchanges and custodians. A consortium of this size kind of has no precedent for working. Maybe you could actually point to Visa would be an example of a consortium working. I haven't actually read D Hawk's book on the founding of Visa and Visa getting started, but my understanding is it was a consortium of a bunch of banks and then finally became one thing. So maybe that's the counter to all of this is that big payments networks actually can start as a consortium, and Visa is a perfect example of that happening. But I tend to be in your boat too, where consortiums are very tough because there's no one thing there for a couple of reasons. One is there's no one person driving it. So maybe this is solved by Zach driving it forward. But the second is that the second you get regulatory risk, look, we have a beautiful environment to build this stuff. Imagine, it's 2026, right? The midterms are in 4 months. Imagine things start to turn. Better believe some of these companies are walking away. Are they really going to take risks on stablecoins? Even though I know we are lovers of the stablecoin here, I just don't see them taking risks here. So I think if it is one of their initiatives, they own it. They're taking the risk. If they're one of 150 companies, they're walking back. So yeah, I tend to agree with you. Can we talk about this? So I tweeted out. I said, it took us 5 years to realize that not everyone should have a chain. Let's not spend another 5 years to realize that we don't all need stablecoins. And I think you push back saying a lot of people actually are building both chains and they are building stablecoins. And so, maybe the data, Jason, would show that you're wrong here. Um, Tell me about here's why I said this, because look at who's running the open standard. Zach. So to me, this feels like a capitulation. Bridge's whole business, and you know it better than most, Bridge's whole business is going to people and saying, we'll build you a stablecoin. Now they also have their own stablecoin, right? They're very similar to like someone like an Agora, I would guess, which I know you guys are an investor in. They have AUSD and they go help people build white labeled stablecoins. Zach going to run this feels like, to me, a capitulation of the idea that everyone should have a stablecoin and focusing on the bigger idea, which is let's make a huge competitor to Tether or USDC. But it sounds like you disagree with me on that.
Yeah, so a couple things. So one, there are people on this list who have their own stablecoin and are actively moving forward with their own stablecoin.
Coinbase is on the list. Coinbase has USDC.
Yeah. Yeah, well, they even like, I think MoneyGram and Western Union are both on the list, and they're both going to announce their own stablecoins, right? Like, there's still a lot of reason for fintechs, especially within sort of like a closed loop system, to have their own stablecoins. I think we're going to see a lot of that. To your point around Bridge, I wouldn't say that Bridge's business is to go give people a stablecoin. Bridge's business is to go give people stablecoin infrastructure, which is inclusive of maybe white label, inclusive of their developer stablecoin, inclusive of on-ramps, off-ramps, inclusive of orchestration, et cetera, right? And one of the things that's happened a lot over the last, call it year and a half since they got acquired, has been that Stripe has also gotten really good at going and like, hey, well, here's Bridge's product. Also, maybe here's Tempo. Also, here's Stripe Verify. And let's do some sort of like consolidated offering.
The Microsoft
and
playbook.
pricing.
Yeah.
Correct.
We'll give you Power BI for free. Yeah, if you
Yes.
just use Azure. Yeah, exactly.
And so I think this is sort of just another part of that, which is like, here's everything you need. And now we have this thing that will hopefully, like the Stripe or the Bridge stablecoin, I think it's called Path. Maybe I have that wrong. Maybe it's the Tempo one, but the Bridge developer stablecoin, like, it's not big at the moment. It doesn't have a lot of liquidity. And so maybe this is a way of which they can say, well, like, you can do your own thing, or you can do this. If you do this, like, you have a lot more connectivity, a lot more liquidity, et cetera. And it serves a different use case because this is more of a payment stablecoin versus like, oh, you're like closed loop white label stablecoin. And I expect that's actually what we see is still tons and tons of people do this like closed loop type stablecoin. And then we see, a competition on the payment side. And I will say that, like, I think there is also a little bit of this sort of, anytime you do M&A, you have to integrate the company or you have to let them operate independently. The original Bridge, M&A process was, hey, they're going to operate independently. I think that was also true originally of Privy. It does feel like there's a little bit of a come back into the fold and consolidation and streamlining of like the whole strategy that's happening here. And that's probably part of also Zach taking this over.
But is that a bad thing? You
it's
talk
a good thing
about
for
it like it's bad. Okay, yeah. So so the next part of this question turns into an economics question, right? So if you look at Circle's OpEx, I think their adjusted OpEx, like if you strip out IPO costs and stuff like that, was like 600 million, 5 or 600 million, if I remember correctly. So that's a large amount of money, right? $500 million. So in this case, let's say the open standard is getting, I don't know, what do you think they get? 10 bips or 50 bips or 25 bips? Like, if you have 10 billion of supply and you're getting, maybe they can get 50 bips. I mean, even that's probably too high. 10 bips, 25 bips. You're getting somewhere in the range of 10 to 50 million a year. So that is let's say it's 50 bips. Let's be generous. 50 bips on 10 billion of supply is 50 million a year. Circle's OpEx, adjusted OpEx, is 500 million. You got to pay for a whole bunch of things, right? Partnerships and OTC desks and settlement and compliance and BD people. Do you think that's like, what do you think happens here? Is this just Stripe is going to fund the bag? Is this part of Stripe's company?
Yeah. So I've talked to a lot of the different partners, both the crypto ones and the TradFi ones. A lot of people have very different opinions on this. There's, a number of people I've talked to who are like, listen, like, this is Stripe's thing for Stripe to go win. I think, everyone thinks Visa was heavily involved as well. And so I think within that, like, and if that continues to be true, they're the definitely ones who are going to be the most aligned. So they have the most to win and the most to lose if this doesn't go well. And so they're also going to put the most money into it. And I expect that they will also warehouse a lot of the costs because of that, right? Part of the reason that Circle has such high OpEx is because of the fact that they are trying to turn an issuance company into a payments company, and they're trying to build all of these other things around around their ecosystem to monetize in different ways, to provide applications and developer tooling and things to make it easier to use their stablecoin. Obviously, Stripe already has a lot of that, and so it's not that the OpEx is necessarily different between the two of them. It's just simply that Stripe has already built it, and or Stripe will warehouse it, and maybe will sit outside of Open Standard, right? And so I expect that they take the most active role here. Obviously, I think my expectation is Tempo also takes an active role here. I don't know if that's true, but like that's just an expectation from the outside in. And Tempo raised a bunch of money and are doing basically a lot of like forward deployed engineering already with a lot of the people on this open standard list, right? And so I think that they'll probably quote unquote like subsidize a lot of the OpEx that's needed by pushing those costs onto some of the largest shareholders.
Yeah, yeah. What do you think about the impact for Circle? Circle's now down from 125, is trading around at the time of recording around 60, $65, right? So it's been cut in half in less than 2 months. Um, yeah, I mean, yeah, Jeremy had the post that you mentioned a little bit, but what are your thoughts on the impact for Circle?
Yeah, I mean, I guess they were back up 6% today. They were down 17.5% on the announcement. So they're probably net down, call it like 12% since this thing came out. This was also sort of a poorly kept secret, and so hopefully people weren't insider trading it, but like I'm sure that there was some of that. Um, and so listen, I think the market reaction is justified. I think, to our point that we talked about earlier, it's absolutely going to be tougher for them for OUSD to take Circle market share than maybe some of the original takes talked about. I expect, but it's almost a sign of not just this specific stablecoin, but just a sign of the fact that like this prize is big, and so yes, like growth could be great, but that also means when a prize is big, that there's going to be a lot of competition, and so you're going to get competition for people like Stripe. You're going to get competition from the banks, and I think the banks are actually maybe the thing that we should be more worried about for Circle than than Stripe, because okay, so maybe Stripe wins a payment use case. Well, the bigger use case today is treasury management and capital markets. Those are the bigger, and like clearing. Those are the really big use cases, and those markets are dominated by the banks. And so there's I think real concern that the banks take a lot of that flow. And so I you know I think that Circle is going they're sort of have this push pull happening right now where there's yes, they have a head start, and they're definitely have a head start on the institutional side. Yes, it's going to be harder to compete with them than people realize. Yes, they have all of this liquidity. Everything that Jeremy said is mostly right, but also it's going to get significantly more competitive, and there is going to be it's going to come from people who are probably more well versed at either product on the tech side, on the payment side, or at capital markets, and that's going to, I think, create a bit of a headwind from them in terms of taking that market share. And so, but listen, as Peter Thiel says, competition is for losers.
How does this impact? Well, actually, one more on Circle. You should be long or short Circle here.
I would not be long or short at this point. I think this is a bit of a wait and see market. I think they probably do need to do something defensive. I don't know what it looks like right now, but like, I've been saying for a while, I think they should be acquisitive. Obviously, the stock has come way down and has come way in, so it's harder now with the current stock price than it was before. But I think they should be acquiring things to expand their capabilities. I think that the issuance itself, the fees that you can take from it, continues to go down and down. I think a lot of and you have to build better product value added services, et cetera, on top of those rails. Stripe understood that early on in the way that they expanded their product set. And so I think it's a buy versus build conversation right now. And I think building is going to take too long as this market kind of heats up.
Yeah. Yeah, I've said this before on the podcast, but I'll say it again now because I think it's relevant, which is these all end up being moments in time that really it just comes down to how good is the founder. And I think a lot of people have lost a lot of money betting against Jeremy. And it's very easy to say this is a short circle moment, right? It's very easy to say like they're cooked, their business model's going to zero, you got to share all your fees, like. But at the end of the day, like everyone saying that is still using USDC as the backbone of every single thing that they do on chain. So until I see open OUSD as the backbone of my hyperliquid trades and my Uniswap trades, or whatever it is, getting deposited onto Aave or Morpho, wherever you do things on chain, like yeah, I still I'm not long or short circle, but I just wouldn't. Jeremy's proved a lot of people wrong. That's what I'd say.
I totally agree with that, and so I agree with you that being it doesn't make a ton of sense to be short here. Considering just like the market growth that I expect. There was, to your point though about things on chain, one of the things that I believe was the head of stablecoins at Ramp came out and said, and Ramp has a very, very close relationship with Stripe, so I'm certain that they will be a big user here. But one of the things that they said was to Jeremy's, he was kind of responding to Jeremy's point about liquidity and on chain, et cetera, was that he thought people were focused on the wrong thing because yes, that will be hard to compete, but that's also not what OUSD is supposed to be. Where they believe OUSD will win and win quickly will be on the interoperability and the integrations with PSPs, banks, payment service providers, different PayFacs, different technology companies. And it was basically like, if we're not even focused on that market, we're going to be the deepest liquidity, and we're going to be the deepest in all of the traditional payments companies. And that is the thing that matters. And so it's possible too, by the way, that like if they do that and then Circle has, the on-chain piece, I think you have to be concerned about Circle's potential growth potential, but, not necessarily losing the market share that they have today. But all that said, if this becomes a very deep Stripe product, right? And Stripe is the one who has the most to win here. To the point I said earlier, like Adyen will support it if their clients want it, they'll want to be able to support it, but they're not going to push it, right? And that is going to be true for all of the acquirers. That is going to be true for a lot of the banks. It's going to be true for a lot of different people around the table. And so it's one thing to support something, right? Everyone supports USDT, supports USDC, supports a lot of people support AUSD, a lot of people support Paxos USD, et cetera. But nobody, but who people push, who people distribute, is different across all of those players, even though they support everything.
Robots and machines will outnumber humans on chain, and peaq is how they get there. peaq OS enables any machine to do business on any chain. It turns machines into autonomous actors and liquid assets with ease, giving robots access to capital and the ability to compound their value. That means funds, allocators, and institutions can underwrite, finance, trade, and route capital to machines the same way they handle any other asset. Millions of new potential consumers for any Web3 service, from compute to storage to anything a machine may need, without a human in the loop. Head to peaq.xyz or click the link in the show notes to find out more. Yeah, 100%. Anything else on this before we get to Cloudflare?
No, I think it's a wait and see moment, and I think it's going to take longer than anybody sort of expects. And I expect we actually get into a situation where people are like, oh yeah, this was a bust, and maybe that'll be calling the death a little bit too quickly. The market's big, and a lot of people are going to win here.
Yeah, I agree. Okay, let's talk Cloudflare. So Cloudflare, for those who don't know, is a cloud networking, and I guess you could call them a cybersecurity company as well. About 20 to 25%. I think the number is 20-21% of all HTTP requests on the internet go through Cloudflare. About 20% of the whole web is protected or runs through Cloudflare. They have about 100 million HTTP requests per second, 100 million per second. So it's a massive company. Good founder and CEO, publicly traded. I think they started 2009, 2010. So yeah, really really strong company. They announced a really cool thing, which is that the monetization gateway. So going to read their tweet. We're opening the waitlist for our monetization gateway, which will allow you to charge for any website, or excuse me, any web page, data set, API, or MCP tool behind Cloudflare. The charges will settle in stablecoins over the X402 open protocol. So to translate that, A, they're supporting X402, and B, but I think the cooler thing to maybe translate it is millions of websites can now turn on pay per request stablecoins. They don't need and any knowledge of stablecoins. They don't really need any knowledge of how to do that. Very natively built for AI agents. So there's been all this. The reason I think it's cool is there's obviously a lot of hype around agents and agentic commerce and X402 and stuff like that. The numbers have actually been really really small. I think this is one of those examples where things just it will clearly happen. It's just things will take longer than people usually think. So yeah, this was a very interesting product from Cloudflare.
Yeah, I agree that there is going to be a lot of stablecoin usage and and the agentic payments. I think actually you might have seen, but it was 2 weeks ago or 3 weeks ago that we saw some data that said for the first time the majority of internet traffic was agentic or
That was Cloudflare too. I think that was
yeah, and it
data
was
from yeah.
Cloudflare talked about it, and so clearly, I mean, they have a better sort of vantage point than anybody here in terms of understanding like what is happening on the agentic use case side. There's, they're part of the X402 sort of like governance board, and I think they're also going to do stuff with MPP. I think when you talk to them, they also do have a belief though that there's going to be but non stablecoin transactions in agentic commerce. I think the reality is that their stablecoins are very good for certain types of transactions. They're going to play an important role here, but maybe that role is very much around this agent to agent, type of transfer or payment, or this agent needing to pay for, a micro transaction versus like some of the other stuff that people have talked about where it's human controlled or larger transactions, et cetera. And so we've actually started to see, I think most people come around to the idea that like actually cards can be modified to be used for most agent transactions, where especially when they're user controlled or when they're enterprise, especially in like enterprise harness for enterprise use cases, and maybe in some of these like marketplace, et cetera, which are in many ways just sort of like really advanced RPA. But for sort of the some of the free flowing agent transactions that they need to pay for things, like obviously stablecoins are better. But I also have a belief that like even if cards are good, I have this belief that like all of card settlement is going to stablecoins over time too, personally. And so like I think stablecoins are going to play a role in all of this. But this was really cool. Cloudflare, I think the stock has been getting quite it hasn't been doing particularly well, but I actually think they stand to play a very interesting sort of place in the payments ecosystem, which is a whole new revenue stream for them and could theoretically be very, very good for their business. And so, super excited to see them do this. I expect this will continue to be from a volume basis. Maybe there will be a lot of transactions, but from a volume basis, continue to grow very slowly, personally.
Yeah. Yeah. That's fair. I'll get to the conclusion after we talk about Robinhood. Then I think you can tie all three of these together, actually, into like almost one message for this podcast. But let's talk Robinhood first. So Robinhood announced the acceleration of their chain, basically. So they launched the public mainnet of their L2, which is an Arbitrum based L2 chain called Robinhood Chain. Bunch of key features that they rolled out, right? Tokenized stocks, so Nvidia, Apple, Google, available in 120 countries. On-chain DeFi, I think it was a Uniswap AMM, and Morpho lending. Agentic AI trading for users, US users specifically. Chainlink as the Oracle, 90 days of zero gas fees, and Hood stock went up. I think it was like 8 or 9% on the day. I have to re-pull that up. Hood is up 20% in the last 5 days. So very interesting. It's It's funny to see like a publicly traded company launch a chain and everyone gets very excited about it. I feel like the chain announcements of 2021 and 2022, the crypto chain announcements have now turned into the TradFi chain announcements. So, yeah, would love to hear your thoughts. I mean, maybe I can start with my most interesting observation, which is, for years there have been these kind of pay to play games where chains go out and they pay applications and big companies to come launch on them. The Robinhood chain is the first time. Now, I don't have all the details, right? I haven't talked to the Robinhood folks about this. I've only talked to application founders. For many years, the chains would pay these huge amounts for people to come join their network, right? So if you see a big TradFi player coming onto a blockchain, there's usually some
I think
payment
that did happen this time too for them to build where they built. But
I think, yeah, I mean, it definitely happened here as well, right? Many chains wanted to be the underlying infrastructure for the Robinhood chain. But what I'm getting at is this is the first time I've seen applications now pay, or at least try to pay, to join the Robinhood chain. There's a lot of founders, I think, of dexes, right, AMMs, lend borrow platforms who don't really understand where the future of their company is going to go. If you're not Aave or Morpho or maybe a Spark or Camino or a Uniswap or one of the Aerodrome, like a tier one player, it's a dogfight out there, right? It's I think a lot of founders are uncertain, and I think a lot of founders see joining the Robinhood chain as their, maybe this is our comeback story. Maybe if we can pay to get on this chain, we or not even get on the chain. If we can pay to be presented front and center inside of the Robinhood app, maybe that's our comeback story, and that saves us. So again, I actually have no idea of the structures. I don't know. I don't even know if Robinhood is taking payment. By the way, I'm not sure if Robinhood is letting people pay them, but I do know that many founders are going to Robinhood with large amounts of money, saying, "Please let my app deploy, and please put us front and center in the app."
yeah, so anybody can deploy on the chain. What can't happen is that anybody can be integrated into the wallet. And so that's what we've seen people be really excited about. If you looked at the announcement that came out, and if you actually watched it, there was a bunch of different names of different types of protocols that were in that announcement. So Athena was on there doing a kind of a yield vault, Morpho, Lighter, the DYDX, the new brand. I think it's Arculus. There's a bunch of others like you talked about, and so like any of those people can build and there's a bunch of other people kind of building on the chain itself. But there was three companies that they actually basically highlighted very deeply on during the presentation, of people who are like building deep integrations into the wallet, and that was Lighter, who I think got the most play, Morpho, and Arculus, the DYDX business. And those were the three that they kind of like.
Arculus is DYDX, right? DYDX
Yeah, correct.
rebrand.
It's a new brand, and it's a little bit of it. It's kind of more like a DYDX v2 infrastructure. The way they're building it, and so they've gone back to a little
And
bit
lighter, so it's lighter Morpho. Uniswap too, or no?
Uniswap,
Maybe
they
not
didn't
Uniswap.
talk about as much on the
Okay,
actual.
maybe I'm wrong. Maybe I'm
Yeah, I mean
wrong.
they're part of the integration, so they're listed there. But they, I think the three, the least that I saw that got highlighted the most for those three. But
There's
Uniswap is
another
also
one too
deploying.
here. If you go down, so there's Uniswap, and then I've actually never heard of this Pleiades, which
Yeah,
is
and there's
deploying with
Rialto, and there's a bunch of others that are actually there. So I think if you actually go down the list, there's a bunch of
Rialto,
people here.
Lighter, Arcus, 1inch. Yeah, so there's a few. There's a few. So I get
Yeah,
what you're saying. They
but what I'm
are.
saying is like when you actually listened to the actual live presentation, they spend a lot more time on like those three, right? Now, but yes, there's a bunch of different names if you go up down here, and also that's for the trading experience. There's also something else for the lending side on Aave as well, etc. Right? And so, anyways, uh, they what I found very interesting during all of this is like if I take Lighter for example, I don't think I think they're definitely not taking payment, or at least I've never not heard they're taking payment. But what they are asking for is, can you do something that one works very specifically for our wallet that makes sure that the experience is best in class? So Lighter, for instance, one of the things that they've done right now is they've made it sort of a segmented instance at the moment, specifically for the wallet. I know they're working to go and also aggregate liquidity between the two, and it's sort of an alpha, so it will happen. But at least to get the experience where they wanted to be at first, they did sort of a segmented instance. But then they also are adding, I believe it's $20 million of lit tokens worth of incentives specifically to the users of the Robinhood wallet. And so it's more around like what can you offer to, I believe Morpho is offering special incentives too. I believe it's the earn product on in the wallet is 7% right now, and I think a lot of that is coming from Morpho token incentives. So there's a lot of this focus on like, can you provide things not to Robinhood, but what would you provide to our end customers to get them really excited to put their full financial lives here, right, and to put into trade here. And so that is where I think this is going, which is that like Robinhood doesn't need the money, but what they do want to do is they want to make sure they have the best offering. And so how can these people do the work to make sure that they have the best offering?
Yeah, 100%. What do you think? Any, yeah, I guess where do you think this goes? This feels like the most exciting chain announcement since probably Tempo, I would say.
Yeah. I'm interested to see the dichotomy of, okay, what happens in the wallet, which I think will do incredibly well. The wallet's actually a very good product. I don't know if you've used it. They're and they're clearly building this.
Dumb question. The wallet is inside the app. You're talking about the wallet
I know
inside
it's a
the app,
separate app.
not a. Oh, I have not used that. Okay,
Yeah,
no.
so it's sort of a separate app now. I don't know what their plans are for the future, and I
It's
share
an
that with.
app like I can download it on my phone, or it's like a Chrome
Yeah,
like.
exactly. Yeah. So it's sort of. Do you remember how Coinbase used to have Coinbase Wallet, and it was like a separate app?
I do remember.
Yeah, so it's like sort of started that way, right? And so they and it's like DeFi type stuff, right? I don't know what their plans are for the future. My guess is for the future they're probably bringing into the core app when they can from a regulatory perspective, but at the moment it's separate. But it's quite a good product. So and go ahead, sorry.
I was just gonna say on that note, I think that's where both Robinhood, Coinbase, actually OKX, I think that's where all of these exchanges are going for what it's worth. Is that a lot of more and more trades are starting to settle on are actually starting to settle on chain. So I think if you fast forward to what Robinhood will look like in a couple of years, Coinbase will look like in a couple of years, a lot of the pairs are just gonna, and a lot of your trades are actually just gonna settle on chain. So Robinhood wants to own the wallet and maybe some ownership in the DEX, and maybe some, the more of the stack you can own the better, obviously. So I wouldn't be surprised if we see Coinbase maybe incubate a DEX, or Robinhood incubate a DEX, or the more that they can actually own themselves, that I think the better, because I think that is where things go. And OKX, and maybe they're not as big in the US, but like OKX is another one, has done phenomenally well on chain.
Yeah.
They have, I think, maybe the biggest wallet in the world today, bigger than MetaMask.
I think
Um,
Binance is still the biggest.
okay, you might be right. Yeah, that might be right. But yeah, they've done a lot on chain, and I think if you go talk to the product teams at any of these exchanges, they'll say, and look, we can see the data too of Blockworks. We can see more and more sex trades not settling on the private, the sex order book, that's actually settling on chain. So
Yeah, no, you're
yeah,
100% right.
Robinhood wallet, I see it. This looks,
Yeah, you gotta
yeah,
download it.
cool. Yeah,
So it's a
great.
good product. And so you're 100% right. And also what all of these guys are doing is, to your point about incubating, what is actually happening is they're all investing right now. So Robinhood has invested into a bunch of these guys. Coinbase has invested into some of them and also acquired some. Kraken's doing the same, et cetera. And so you're seeing them kind of get, that alignment early on, and maybe an investment turns into an acquisition in the future. M&A with products that have tokens is still a very hard thing to think through today, but we'll see more of it. But I totally agree with you, and but I think to the point I was making, which was that like the wallet product, I think is going to do incredibly well, and I think the people who are integrated and pushed into the wallet are going to be doing incredibly well. I don't know if I think that like the things that are not doing well in the wallet will do well on the chain, i.e., you know, for the people who aren't getting this preferred position in the wallet and they deploy on the chain, will there be other liquidity that people are doing things outside of the wallet on the chain, right? And that's where um, I would be much more dubious. But I think this is where the whole world is going, though, which is this is why I said this, tweet back to your tweet about like, oh, have we figured out that we don't all need, all these chains? I think we are going to see chains from a lot of the world's fintechs, a lot of the world's banks, and they're just going to have their own execution, kind of environment for the things that exist on their apps, right? And maybe they'll be open and so other people can interact there, but they want to prioritize the things that they want to prioritize in their applications. And I remember it was like Kyle Samani and I got in a fight about this on Twitter, back and forth about this on Twitter a couple of years ago, where I've been saying this was going to happen for a while, and he said no, it's not all going to happen in Solana, and I continue to see the signs of this is what's happening, and this is where we're going in the future. And in fact, I even talked to a founder of a high throughput L1 earlier this week, who it's a high throughput L1 that hasn't had a ton of traction, but has some good tech and is a team that came out of, kind of one of the really good kind of L1s. And this founder was telling me, oh, I'm actually getting a lot of acquisition offers from corporates right now around, which is kind of weird because I'm building this thing and I haven't really had the traction yet, but I think I have great tech. But all these corporates are coming to me and saying, hey, I actually just want to acquire you, right? And I think that is where what we're going to see is we're going to see a lot of things like this, where someone like Robinhood is doing all of this, on-chain crypto economic activity, and they want to own their own execution environment. And so I think that's where we're going.
I do too. To wrap all this up, my summary statement, like what's the takeaway from all this? We're talking about Stripe and Cloudflare and Robinhood. There's this very famous, probably overused at this statement, which is it's like, startups versus incumbents, right? Can startups get distribution before the incumbents can figure out the innovation? Something like that. Maybe there's a third bucket in today's world, which are tech companies, right? Many of these companies are 10 to 15 years old, but because of the scale and the growth rates of some of these internet businesses and these tech companies, they're almost the size of many of these incumbents, but they still have the scrappiness of a startup. And so this statement of like there's only this two companies, right? There's the startup versus the incumbent. There's a third company here that crypto companies need. There's a third group that crypto companies need to be both excited about, but also they're your competitor in many of these cases. And it's the tech companies, it's the Web 2 companies, it's Stripe and it's Cloudflare and it's Robinhood, and it's opportunity because they're your customer, right? Like Morpho will do very well. Lighter will do very well from integrating with Robinhood. Both those companies will benefit greatly, but they're also, in many cases, going to be your competitor. So it's an interesting. I don't know. I haven't fully formed my thesis or my idea on what that means, what the takeaway is. But I do think this idea of like startups versus incumbents, maybe it might be a weirdly an old school idea now that they're the tech companies.
I do think, I had it's a little bit all about perspective, right? And so like very clearly, Stripe builds product and has engineering that is far ahead of a lot of like the people that you and I would consider incumbents. But also I got a call from a reporter yesterday who was sort of, wanting to talk about all of this stuff and had seen my post on X. And that reporter's perspective was that Stripe had failed out a bunch of products and they were like not that good of a product organization, right? And this is a reporter who's like in the Bay, right? And so I think, in many ways, it is just natural that as businesses get bigger, they have a harder time doing kind of net new risky things, right? And so yes, is Stripe or Cloudflare or name your tech company, Robinhood, better at building new tech than Charles Schwab and whatever, like, global payments is? Like, yes, absolutely. But but they are sort of the incumbents now, and will they still be able to move as quickly as a startup? Like, and especially in a world of AI, like probably not. Right. And so I think it's just that everything is getting faster, everything is going to market quicker, but still the startups have advantages on certain things.
Yeah, I don't know. I'll update you in 2 months once the thesis is fully formed. And look, we'll see if open standard takes
Well,
off.
OpenStandard's not even gonna launch until like late this year,
Well,
probably.
2 months is too fast. Yeah.
Yeah.
Problem with consortiums, right? We'll see in 5 years if open standard takes off. We'll see if Robinhood chain gets big. We'll see if anyone uses this Cloudflare thing. Yeah, TBD.
Well, I mean, I think my takeaway from all of this is two things. One is that things are coming on chain. It's happening. Like I could tell it on the Goldman thing. You could tell it on in all of these announcements. There's no doubt in my mind that fintech, stablecoins, tokenization, like the DTCC is going to launch their thing in October. Like these things are coming on chain. It is happening. You can't get in front of this train, right? But I think the other point here is also things are just happening quicker, and like it is going. The level of uncertainty is higher. The pace of movement is quicker, and there's just a general, I think, sort of almost like manicness or like mania going on around like having to ship this stuff very quickly. And I would just broadly say that we are going into, with AI and with tokenization and digital money and digital assets, a world of just incredible GDP growth and financialization of everything, and people should be ready for that, but and should prepare for that and should work towards being part of that that future economy.
Yeah. Venice. Tricky one to talk about because you guys led the round. Venice is Voorhees' second act. It is a AI platform that is permissionless and can't be censored and has done very, very well. They announced a fundraise, a Series A, I think it was, $65 million.
It's the only outside fundraise they've ever done. So they announced
they announced a raise. Ignore the Series A part. They announced a raise, 65 million at a 1 billion valuation, I think it was. And the first thing to do is congratulate Eric because he's one of the better. He's obviously an amazing founder. He has deep conviction in his values and his ethics and his morals, which actually is I think what led him to build Venice. It's also very relevant to this conversation because the interesting conversation that I think this sparked is Venice was one of the few. Usually what you do in building a crypto company is you go raise a pre-seed and then a seed and then a Series A, and then you launch your token and you get this huge valuation on the token, and the token's down only. What Venice did is they launched their token from basically day one, and the token's done very well over the last several months. The controversy around this round is that they raised equity, but they raised an equity round, but they already have this token. So there's a dual token equity model now that many would say, including my co-founder Mike had a video on Twitter that went viral in the crypto sense of it, kind of criticizing this dual structure. I know many people who looked at this round and some who invested in it. Obviously, you guys led it, and I do know that this was a hot topic even in the fundraise behind the scenes, was how do we even structure this so that the equity holders and the token holders would both benefit. But again, I don't know what you can actually say about this. Obviously, some of this is confidential, but maybe walk me through your thinking on just this dual structure, and obviously Venice in general. I'd like to hear your guys' investment thesis.
Yeah, I mean, listen, on Venice specifically, like it. I think if we've learned anything over the last, over the Fable 5 announcement, and over what we've started to see in terms of just general like wins of focus on the AI conversation in DC and in sort of global regulatory bodies, it's that there is a clear need for privacy, and there's a clear need for continued access to a broad set of different models. Now, that doesn't mean that Venice is going to be a solve for potentially like if there's export controls. Like you're not, obviously we're not, nobody's committing crimes here, but we're going into a world of which your data is a commodity. Everything you do online, everything you do on these and these models, they are being used and sold and packaged to everybody else. And the VPN industry isn't in and of itself a $70 billion industry. The VPN industry has, and I actually don't know if you saw, but there was a bill that I think passed in Utah to ban VPNs. And one of the most ardent, groups to come out against that was actually one of the national press lobbying groups, which is that like you actually put the press at risk for retribution from the government if they don't have VPNs, right? And so the understanding and the need for privacy and what we've seen in terms of kind of government overreach, that is going to continue to exist, and Venice is going to be a big part of that. And I think beyond that, like their ability to do, routing to different models, give you access to different models, to be able to also the token model that with DM and VVV that allows you to lock in some compute prices. Like it's all very innovative. It's great business and it's grown incredibly quickly. And so we're very excited about Eric and actually his co-founder Jesse, who I've known him for a long time, was a fintech founder actually before, and I helped him sell his old business to Betterment. And so we're really excited about them and what they're building. I think on the the piece around the token and the equity split. Listen, this
Wait,
conversation wouldn't be
is it Jesse
happening.
Crowdman from Makara?
Yeah, exactly.
I never put that together.
Yeah,
I
yeah,
didn't know
Jesse
that
Crowder
until
from
you told me.
Quora.
Interesting.
Yeah, and they've got a super interesting story how they came together too, because him and Eric knew each other a long time ago and kind of came together recently. But listen, on the token equity split, I have a perspective that would piss a lot of people off, which was that like most of the takes on Twitter were just so ill-informed and like misunderstand like just generally what business is, that like they're not really worth my time to respond to. But I will say about the broader point, like there is just a naivety to the situation we are in, which is like we do not have a Clarity Act. And if you look at Polymarket today, I think it's like 40 to 45% likelihood that Clarity Act passes. If you talk to people in DC today, many of them are quite bearish around it. The ability to go and do, deep, detailed governance and deep, detailed capital return to token holders globally and in the US for US founders is impaired. Like that is just the situation we are in today. And you have a couple of, call it, global foundations and companies who have done this sort of like collapsing of the equity in the token to try to keep the token the best rates possible. These structures are untested. They are mostly global, not US based. They have created a situation and where the only way to raise more money to operate their business is actually to dilute current token holders. And they've created a uncertainty about an ability to do things like enterprise contracts, right? And so we are in, I mean, you saw when a cross protocol went, private a number of months ago. One of the things Hart basically said in his announcement was we could not do the enterprise contracts that we needed to do with businesses for B2B contracts with the token. It was a blocker for us, right? And Eric and Jesse went out there and they fair launched this token, and they allowed for a significant amount of price discovery. They have a very interesting model of which they've been very clear about, which is that with net new subscriptions, we buy back the token. They have never once been anything but incredibly just transparent about how they return any sort of value back to that token. And they have also never once said, hey, you have now, full legal rights to, like, it's an equity, right? And if people thought that was what had happened, they were stupid, frankly, and more naive. And so they've never been unclear about that. And so would we like to be in a situation where there is regulatory clarity and we can collapse these two things? Absolutely. We are not in that situation. We will not be in that situation anytime soon. And so uh, I want for a better world like everyone else, right? And I believe in the future that a lot of people are hoping to get. The fact that people say things like, "Oh, there's like no reason for this in 2026," is just a level of naivety that I frankly like do not think is worth like a conversation because it just does not understand the situation we're in. And so, anyways, I'm very excited for these guys. I believe,
Wait,
they
wait, 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 Rob. Why do you think it doesn't warrant a conversation? Isn't that one of the main conversations to be had? Because tokens
it's
are
not
so
that.
fundamental.
Sorry, go ahead.
Tokens have been so fundamental. Tokens are such a good idea. Tokens are such an amazingly fantastic idea, and yet they're so fundamentally broken today. So isn't there a really, really, really important conversation? Maybe one of the most important conversations in the industry should be around tokens and equity.
Yes, but we cannot. So what I am saying is that the naivety exists with the idea of what is possible, and we can't create a new security and then decide that that security is just going to exist unless you want these founders to go to jail. And so the idea that we are in a situation today where we can, in the US, in companies that need to do things like build a data center and do and have these enterprise contracts, could collapse token inequity into a single model that allows them to have full ownership, full rights of the equity owners, full governance, and yet, be able to have rights to anything around M&A, have rights to any sort of, capital return policy, is obviously a thing that cannot exist. And it is so obvious to me that I find a lot of the discourse to be incredibly silly, frankly. Do I want that to be the truth in the future? Absolutely. I'm so aligned with that. And all of us are. That is not the situation we are in today. It's a fact.
Yeah, yes, but why would you launch a token then?
Well, and listen,
There's a
certainly, like,
tax on it's like a public company like the way that I think about this when someone has a token and you're like, "Oh, you should share all these things." They're like, "Why would I ever share that?" It's like cuz you chose to run a public company. The moment you launched your token, you, not me, not the public, you chose to go public. It's like a public company CEO being like, "This is like ridiculous that I have to submit this stuff to the SEC. This is ridiculous I have to do quarterly reporting," which it probably some of that probably is. Like the requirements on being public are there's way too many requirements. We can all agree with that. The costs are way, way, way too high. Um, but still, you have to do it. It's the cost of being public and lets you access the capital markets. So there's a benefit to having a token, but there's also costs that come with it. So that I don't know. I just feel like it's like yeah, you don't get to launch your token if you're not going to do some of this stuff.
but he didn't. But what they didn't do, and I think people are misunderstanding this a little bit. They didn't launch a token and say, "Here's equity," right? They never said it, told anybody that, right? What they did is they launched a token that said, "Take this token, and if you stake this token, you get another token back that is a pre-buying of compute power," right? That is the reason for these tokens to exist. These tokens to exist to allow people to have a to essentially hedge out future compute costs, right? And so it serves a purpose. He and the company, and Eric made this point a bunch of times yesterday. The company is incredibly incentivized and aligned by having the token because they're the largest holders of it. The company are the largest holders of it by far, and they're going to continue to be the largest holders of it. And they didn't have to dilute the other token holders to go and raise money to build a data center. Instead, they actually helped those equity holder, or they helped those token holders by not having to launch or to put a lot more tokens into the market to go and build a data center, which is what I think that they need to do. And that token, which exists to go and help and to help you hedge out and lock in compute costs, has a purpose for you. And then the equity has a purpose too, so that they can go and build a big business. To your point around the is this how should this be the long-term fix? Like, none of us want this to be the long-term solution. We want there to be a more options and more collapsing of tokens and equity. It's just that that thing does not exist today. And so we have to be pragmatic about the situation we are in.
Yeah, yeah. I agree with that. I agree with the second half. I also agree. I also believe that Eric is one of, again, like I started this, I'll end it by saying I also think Eric is one of the better, not only better founders, but also just better people in the industry with better morals and values than most of the industry, I'd say. He also gave one of the best talks I've ever heard, which was at Permissionless, which was a phenomenal keynote, which people should listen to as a reminder to what we're all doing here in crypto in the first place. I also don't. I read all of his replies because this is something Blockworks feels strongly about. Saying that they are one of the biggest holders of the token, so they're incentivized just like the holders, has gone really poorly for the holders of tokens for the last several years. Every chain is the biggest holder of their token. They were all incentivized to have it go up, but yet the founders got super super rich while the holders of the token did really really poorly. So. Um, I don't think Eric should be concerned with solving this, by the way. He should be concerned with building the biggest business possible, but I think the industry needs to recognize that this is a problem that should be solved.
I don't think anybody, including Eric, would disagree with you that this is a thing that needs to be solved. Um, I it's just Eric understands. One, he bootstrapped this thing and he, fair launched this token and, he got this thing to a very big place before it took in any outside capital, right? And he created this token with the idea that they were going to try to do this interesting compute model, like I talked about. And then he ran into the realities of trying to build an AI business that was scaling exponentially and that was like unable to pay for compute, right? And he had an option to go and release a bunch of tokens to the market and then try to build, sort of like a governance infrastructure and a legal infrastructure that, like, frankly, like doesn't really work for most serious investors, or had an option of doing what he did. And maybe this is a lesser of two evils situation, but it is also, by the way, um, you can disagree with the whole thing, but one thing that Eric has done, to your point about being, having high morals, is he's worked really hard to be as transparent as possible. And so there is no hiding the ball here whatsoever. And like, people know what is happening. So if people want to invest in the token because they believe in the product, or they think it's, there's going to be so many net new signups that the buybacks are going to pay for that, then they should do that. If they, don't like the fact that that now there is this dual structure and that they don't have, the same rights as the equity holders, well, then they don't have to buy it. I know I'm going to use this analogy, which I know is not completely fair. So I know people are going to yell at me about it, but like, there is also different rights if you're a debt holder or a pref holder or a common holder, right? And like, you invest in different things, you buy different things with the understanding that the rights are different. And so like, how you price those things and how they should be priced is going to be different. And so the market will figure that out.
Do you I see where you're coming from on all this. And actually I tend to agree with most of it. Do you think that token holders should know the deal that was done? Do you think that they, like, let's say Dragonfly had or all the investors in this round have an option to buy VVV tokens? Should the token holders know that somewhere? Does that need to be public?
Um, I mean, Eric made the decision to make that public, right? Because for Eric, it was very important for him that he make sure that there was as much transparency as possible with the token holders, right? And for not every founder decides that, like, that is, that is something that they want to put out there. I think it's a personal decision that is going to be contextually different, depending on the product that you're building, the consumer versus institutional, et cetera, right? But what I will say is that his perspective was that was the right thing to do, and it was also his perspective that it was most likely to allow the token to continue trading well. And to your point, I mean, you guys are very focused on transparency in the tokens. And so he's trying to be as transparent as possible, and in hopes that people want to continue to and be a part of the ecosystem. And I don't think he's like he's not trying to get people to buy the token, but he's trying to make sure that if people want to trade it, that it trades well.
Yeah, I agree. Yeah, maybe my summary from this conversation would be one. I do think this equity token structure is something that really needs to get fixed for the industry, because I think that we need to make tokens work for crypto. I really believe that. The second is that it was actually kind of a bummer to see this conversation take away from the success that Eric has had with Venice. And I would end this by just saying congrats to Eric. And I actually didn't know Jesse, but yeah, I didn't realize it was that Jesse. So yeah, congrats to Jesse and Eric, and yeah, the whole team. And it's cool to see. Yeah, cool to see them do well. So that would be my summary.
Yeah, and it's a great product. Try it out.
It is a great product. Anything else on the week, Rob? Content of the week, or are we getting?
No, I think I think the reality right now is like there are a lot of things going well. And like that's very clear from this. And I think we say this every week, and it hasn't mattered for token prices, but I continue to remain very excited about things that are happening here. And so I think I sound like a bit of a broken record at this point, even though the tokens keep going down. But excited for institutional adoption, excited for the fintechs, excited for these cool, innovative products of people trying new things like Venice, and and enjoy the 4th. Have a beer, eat a hot dog.
Have a beer, eat a hot dog. Watch the U.S. win. Indeed.
Absolutely.
Content of the week.
That's the content. Watching the U.S. win.
Watch the U.S. win. Watch the U.S. win. I like it. I like it. I do have a good book, which is When the Heavens Went on Sale. I'm about halfway through this thing. It's about all the space companies like Rocket Labs and Astra and Planet Labs and Firefly, except for SpaceX. So it's about all the it's Ashley Vance. I don't know if you've read any Ashley Vance. He's a good reporter actually, but
yeah, he broke all the all the OpenAI stuff.
Yeah,
right.
Yeah, exactly.
Yeah.
So, all right, folks. Hope you.
I will say I will give a real content, just because it's not just the US. But new season of The Agency with Michael Fassbender on Amazon Prime, very good. So it's a remake of a French show. They did a first season and a second season, sort of a spy show. Incredibly good. If you want something on the holiday weekend with the fam, I'm all about it.
Nice. All right. Rob, good to see you. Santi, we missed you. Come back with some bullishness, Santi, if you want to be let back in. Cheers, folks.
Thanks.
Have a good one. See you, everyone.